All right, let's talk about investing in the Pakistan Stock Exchange. I know, it can seem super complicated, but forget all that for a second. Today, we're going to break it down with a simple three-part formula that anyone can use to get started. So, does the idea of stock market investing just make your head spin? All the charts, the confusing jargon, the feeling of risk, it's a lot for sure. You're not alone if you think it's just too complex to even try. But honestly, it really doesn't have to be. We're going to cut right through all that noise. The plan is to focus on a straightforward three-part formula. It's all about turning what seems like a huge challenge into small, totally manageable steps. Sound good? Let's do it. Okay, part one, the foundation. Before you can even think about investing a single rupee, you need to know where that money is going to come from. And that all starts with a solid personal budget. We're going to use a really simple but powerful tool for this called the 50-30-20 rule. So here's how it works. Just imagine your monthly take-home pay. This rule helps you slice it into three buckets. A big 50% chunk goes to your absolute needs. Then 30% is for your wants. And that leaves a crucial 20% for savings and, you guessed it, investing. So to be super clear, your needs are the essentials, right? Things like rent, bills, groceries. Wants are everything else, eating out, your hobbies, that kind of stuff. But that last 20% slice, that is the secret sauce. That's the fuel for your investment engine. This is the money you're going to put to work. All right, you've figured out your budget and you've got your investment money ready to go. So now what? Where do you actually put it? I mean, the stock market is massive, but don't worry, we're going to really narrow our focus to keep things simple. So, our playing field here is the Pakistan Stock Exchange, or PSX. You can think of it as a huge marketplace where you can buy tiny pieces, called shares, of some of the biggest and most well-known companies in the country. Now, trying to pick one single winning stock out of hundreds, that's really, really hard. So we're not going to do that. Instead, our formula targets the KSE 30 index. Just think of this as a pre-made shopping list of the 30 biggest and most popular companies in Pakistan. This is our target zone. Simple. And that brings us to the final part of our formula, the method. Look, investing isn't a get-rich-quick thing. It's a marathon, not a sprint. So we're going to lay out a consistent, steady strategy that you're going to stick with for the next 5 years. Our method has three very simple rules. First, build what's called a diverse portfolio. Second, invest on a regular basis, not just one time. And third, and this is the real key, stay consistent with it for at least 5 years. That's it. So what does diverse portfolio even mean? It's that old saying, don't put all your eggs in one basket. The goal here is to spread your investment money across many of those 30 companies in the index. You'll own a piece of banking, a piece of energy, a piece of tech. This is how you spread out your risk. Okay, you've set up your budget, you've picked your target companies, you've started your consistent investing strategy. What happens now? Well, my friend, this is where the magic begins. This is the payoff, and it's all powered by a little thing called compounding. There's this famous quote, often linked to Einstein, that calls compounding the eighth wonder of the world. The idea is, he who understands it earns it, he who doesn't pays it. It's basically your money making its own money. So if your first 100 rupees earns 10, next time you're earning on 110. It creates this incredible snowball effect over time. Let's make this feel a little more real with an example. Let's say you start out with an initial investment of 100,000 rupees, and you keep adding to it regularly using that 20% you've set aside from your budget. After 5 years of just sticking to the plan, investing consistently, and letting all your earnings get reinvested and grow, that initial amount could potentially be worth over 180,000 rupees. And that's not just from the money you put in. A huge chunk of that is growth on top of your growth. Just look at this chart for a second. The bar on the left is your savings, but the bar on the right? That's your savings plus all the growth. See that gap between the two? That is the magic of compounding right there in front of you. That's the reward for your patience and discipline over those 5 years. And really, here is the bottom line. With a strategy like this, your money finally starts working for you, 24/7, growing in the background. And isn't that the ultimate goal of investing? So we've laid out the entire formula. Budget using the 50-30-20 rule, target the KSE 30 index, and invest consistently for 5 years to unlock that incredible power of compounding. The only question left is, what could your magic number be?